What's going on, everyone? All right, time for another trade recap. And today is going to be Tuesday, April 15th. Man, what a beautiful trade this was. Hopefully, you were able to take this. I've seen some people take this trade today. So, as always, I want to start out on the weekly chart here. I have a few little nuggets for today. So, you'll definitely want to stay tuned in on this one. All right. And some of it I kind of mentioned yesterday on the other recap, but today, my theme for today's video is keep it simple. Keep it simple. There's so many things that you can learn, right? So many different ways of trading. As you know, I trade ICT strategy, right? ICT concepts. And if you trade ICT concepts, you should know there's many different ways to trade it, right? But if you think about it, the overall goal, the main purpose of ICT concepts is knowing where price should go, how the market should operate, knowing the framework. That is so important. Knowing the framework, the underlying narrative to what the market's doing. And don't get too zoomed in and hyper-focused on little specific things, because there are so many things you can apply and you can take from this video or that video or whatever video that ICT's making, or any of his people that teach ICT concept, not his people, but people out there that teach ICT concepts, right? There's so many ways you can interpret it, right? For me, what I did, because I get a lot of people asking me, how do I start? How do I get involved? Where do I get going? Like, what do I do? What I did is I only wanted to hear from the horse's mouth, right? Like when I was studying and really figuring this out, if ICT didn't say it, I didn't believe it. And I encourage everybody. I know people watch my videos and I talk about it, right? And when I was trading live, they like to see. But I also encourage you, learn from ICT. It's always great to get other people's perspective, but line it up with what you're learning from ICT, all right? So anyways, there's so many different ways to do it, but keep it simple. So I want to break down something real quick on what price, like you got to have your framework, you got to figure out what price should be doing. And don't get too zoomed in. And I say that, and I want to bring you to the weekly chart, right? And I mentioned this yesterday. We have this gap. So not without going into a lot of framework right now, I want you to look at it this way, all right? Price is running down, right? We can see that. Price is running down. Let's get this. Price is running down. And let's say it's here, right? And it's coming down. What I'm always looking for, and I'm making this in simple. I want to break this down very simplistic, all right? Think of it, price as, and I mentioned this on one of the other videos, like a ball, right? A bouncing ball, a pinball, whatever you want to call it. Looking at these candles here, it's going down. I'm always looking for what can stop the price. Like what can stop price, right? Obviously, if you're that's a really dumbed down version, right? What can stop, like if a ball is dropping, right? You have a ball and it's falling, right? It's falling. What's gonna like you throw it off of a roof? What's going to stop it? Well, let's say there's a like a little awning that's hanging over in the middle of the siding of the building, right? Well, it'll probably hit that and then it'll bounce, right? Okay, or I'm telling you, this is very simplistic here. Or let's just say here's the ground and there's nothing, right, between where you drop it and the ground. It's obviously going to go all the way down to the ground. Okay? Very simplistic. If price is coming down, I'm looking, what's going to stop it? And if you know anything, you know price draws to liquidity in imbalances and efficiencies, right? So if that's the case and price is just going, that's what I'm looking for. Where's the next imbalance, liquidity, inefficiency? Where is that? And until we reach that, like, I have no reason to believe price is going to stop in the middle of nowhere. Okay? So here, if you look here, this is the weekly chart. This was the week before last. And then you have this purple one, which is last week. And where did it go? And it stopped, right? So I look, and I got to wait. See, this is what you got to do. You got to anticipate and wait. Anticipate and wait. So the market came down here and it closed all the way up here, right? This is where the market closed. Okay. So now that it's closed, this bar is closed, I can see it's stopped here. Why? Well, there's an imbalance there. Okay, that tells me. So now after that, if this is an up candle and it bounced off of this, where's it going? Like, why would it just go and before this week started, like I said, it stopped here. Why would it just close up and stop right here? Well, you do have this imbalance right here, volume imbalance, right? And it hit that. Okay, so it hit that, and then we opened where? Up here, right? Because you have the open. So far, this candle's still open, but then you have the open. So now, is this open right here above this imbalance or below this one? No, it's in the middle. Well, it's in between them, not in the middle, but in between them. So what am I expecting? Since this was an up-closed candle, I'm expecting price could either go up to here, this imbalance, or come all the way back down here, right? So that's what I'm expecting. I need to see where's it going to go. Now, for example, you have this imbalance here. Let's say price gets there. That's when I want to see, do we bounce off and go down? Or when it gets there, do we now continue up? And if it does continue up, my next job is to be looking for the next imbalance, liquidity, or whatever, right? So I can automatically see we have this, then we have this swing high. So if we do take this area and doesn't come down, then I'm looking for price to head here. Like, that's that simple. That's what I'm looking for. Now, like I said, if it does reject here, hits that, rejects, and starts coming down, well, we have this potential imbalance, but we don't know that yet until the week closes, right? But let's say we do come down and we don't leave this imbalance, we bounce off of this. Well, where's it going? I would likely believe, unless some other thing tells me otherwise, but I would likely to believe we're heading here towards that right there to take that low and eventually through here and to that low right there. Oh, hold on. Sorry. Right here. This is what I was talking about. Let me just zoom out. I forget I'm in the way there. So I was talking about this low right here, this imbalance over here. Okay. Right here. All right. So that's what I would be expecting. So right now, based on the weekly chart, I have to be more bullish because we have, like I said, this imbalance and we just bounced off this right here. Because this is where we came from, I'm expecting price to likely trade here. That's what I'm expecting. Does it have to? No. Does it mean it will? No. That's just my expectation, and I'm anticipating that, right? So now let's go down to the daily chart. Okay. That's not the daily. There we go. Here's the daily chart. So here's that area. So what happened after this area here? Well, we reached back down. This is a low. This could be a rejection block, actually. because you have this lowest point. Then we reached back down into the wick and we took off, right? What do we have here? Look at this imbalance. Volume imbalance, right? We traded right up to it, came back down, and then came back up and created this imbalance. Now, let me also note these relative equal highs right here, okay? Relative equal highs. So with these relative equal highs, I'm immediately thinking, well, that's a nice draw. We still have this imbalance here. And let me make sure, and for those of you that don't know exactly what I'm showing with imbalances and stuff, let me go ahead and mark this out. Right here between the bodies. And then also right here. Okay, so these are imbalances. And then right here is where I'm talking about the equal highs. Look at this high and this high. These relative equal highs right here on the daily chart, okay? Along with those imbalances. So then we have this little one here that we created, right? Right there. So now the same thing, I'm thinking, well, the weekly I'm leaning more bullish on. The daily now, I'm more bullish at the moment. Yes, we have this imbalance, but we also have this one now here too. And we have this draw up here, these relative equal highs, buy side liquidity right here. I'm thinking this is pretty strong. Like, I think price is going to come up through here. It's very strong. So when the market closed here, right, creating this imbalance. So what I'm thinking is we're going to come back into this imbalance right here, right? We're going to come back in there. So I'm waiting. When we're here, what are we going to do? What are we going to do? Same logic. We're in here. Are we going to go up and through? Or are we going to trade down? Now, if we trade down, this is where I'm expecting price to go. If we trade up, where am I thinking that it's going to go? Well, remember, we had this imbalance and that high. So I'd expect price to trade up through there. And then if it keeps going, same logic. I'm looking for imbalances, and until it reaches them, I'm expecting price to get there. And once it gets there, that's when I'm looking to see the reaction. I'm looking to see what happens, right? So for today, I was on the bullish side, right? And what I wanted to see today, remember, if you're bullish, you want to see manipulation to the sell side. Anytime you're bullish, you want to see like a bit of an accumulation, manipulation, and then you want to see the distribution, and vice versa, right? If you're bearish, you want to see manipulation up, distribution down, right? Okay, so today we opened, and what I wanted to see was an open and a run down, and then a run up through here. That's what I was looking for, all right? So those are my golden nuggets for the day. Look for that. All right. Look for that. So then I have that lined out. Okay, that's what I'm expecting. Then I'm gonna go to my 1 hour chart. And remember, we had this big run up there. But I wasn't too concerned back here. Like, I'm not expecting a read pricing of any of this right now. None of that. I'm kind of more so just looking in this area at the moment right here. Looking at this area. So there wasn't a lot in terms of, having like a clear buy side, sell side liquidity and all that. Like, I had this low marked out right here as a sell side liquidity. And then we had, let's see, that was at 10. So I had this high at 9 o'clock, but then was looking at these highs up here as well. Kind of like just a couple areas to really look at. And there was no fair value gaps in here really and all that. So I was kind of like, well, all right. I'm really looking for a price to deliver to the long side. So when we open, I just want to see if I can catch that manipulation, see something. There's not a whole lot going on here on the 1 hour. So then I dropped down to the 15 minute. And then here I'm focused on this, pretty much this area here, right? So then what we have in this leg here before the open, we had a little fair value gap right here, one right here. So I can mark this here, 15-minute fair value gap. And then right here at this 930 bar, we did create this fair value gap right here on the 15-minute as well. All right. And then I had, like I said, I had this high. Oh, I also had this 15-minute fair value gap back here. Because we had this one too, but I marked this higher one out because they were pretty much kind of overlapping. So anyways, we ran up and well, let me drop down to my trading chart now, because this is kind of how I framed out my 15-minute. Because like I said, when we opened, we went up, and that's not what I was looking for. So I want to show you what I do in that case, because I wanted to see an open, like I said, like here's the 930 candle opening right here. And I wanted to see an open, and I wanted to see this move into this 15-minute fair value gap, or I wanted to see a move sweeping here and then up. Well, even higher. But we didn't get that. So let me show you what I do in that case. All right. So now let me pull over my trading chart that I traded on. Okay, here it is. Oops. Okay. Here was that move that opened. Okay. We did have the opening candle here. Right here. We opened. We kind of did this, and then we just ran up, gave our first presented fair value gap here. And I'm like, this is not really manipulation, right? If you look at it, like we were already just coming up, and then we just had an open and then a continuation going up. So I'm like, that's not what I want. Like, I wanted to see it go down into this imbalance, volume imbalance, and then go up. So, of course, if it goes down into the volume imbalance and then continues running, then I might change my bias. But until then, I wanted it to come down and then go up, but it didn't happen. It just ran up, right? So now what do? That's why I mark out, where's price going? It's not going to just go up to nothing. Well, here's that buy side that I marked here. Ran up, hit this 15-minute fair value gap, kind of did a little pullback, but in this pullback, do you see any fair value gaps? No. Okay, so there's no entry for me. Because even though I'm bullish, I can take a short. And the reason why I can take a short is because we didn't have manipulation yet. So if I was looking for a long today, I would have wanted to see the manipulation and then look for my market structure shift, fair value gap, pull back, and go. That's when I'd be trading with my bias. But since that didn't happen and we ran up, now I got to wait until we hit a draw wherever we're drawing to. And if you look, we hit that 15-minute fair value gap. And we immediately came down, took this swing low, created this inversion. Let me mark it here. Created that inversion, left a new fair value gap right there. So now that we're coming off of a buy side liquidity, off of the middle, hit the middle of this 15-minute fair value gap, and then we had a market structure shift, fair value gap, inversion. That's telling me, all right, we may see the manipulation down now. Even though it ran up, and when I say manipulation down, I'm talking about the bigger picture. I'm not just talking about the 1 minute or 5 minute chart, or even a 15-minute chart even. Because I don't think this quite showed on the 15-minute chart. But I'm talking about in the big picture. If I'm looking for a long or the market to run long for the day, I want manipulation down first. Obviously, today it didn't really run anywhere, but you only know that in hindsight. You don't know that while you're trading live. So whenever I saw this, I'm like, okay, I don't think we're going to run all the way down or through buy side or even down into this volume imbalance. But what I do think we're going to do is run into the 15-minute fair value gap that I mentioned. See, let me bring that down here. Here's the 15-minute chart. This one that I mentioned right here. We had this one where we took these highs, ran all the way up here. So where am I looking for a pullback? If price is going to remain bullish, I'm looking for a pullback into this 15-minute fair value gap and then it continue up. So on that pullback, if I get an entry presented to myself, I can take a short even with my bias being long because I know where price should be going. That's key. All right, so we hit this, we get the entry, I get my entry right here, and then I targeted right here, this first presented fair value gap, which overlaps with the high of this 15-minute. So I targeted that, but sure enough, it ran all the way down to this volume imbalance. And then that was it, right? That's as low as it went for the morning anyways. And then at that point, that's when I expected it to go up and continue, but obviously it didn't. But I actually don't care anymore at that point, right? Like I don't care because I got my trade. I don't care. It could do whatever it wants, and then my bias could be wrong or not necessarily wrong. It could mean it just didn't happen today. It could happen tomorrow until, let me go to the daily chart, until we get a move down through this volume imbalance that I mentioned, I'm going to remain bullish to run through that. So that's how I look at it. Now let me play you the video of the trade right quick, and then that will conclude my trade recap. All right, so here we go. This is where we took the lows right there. And now I'm waiting. We're waiting for it to come back up inside this gap. There we go. I get in. And this one actually worked out very well. Put my stop right above the high there, targeting down here. And this is 72-point winner. Now, I didn't make as much dollar-wise because I'm still trying to get all of my Apex accounts on the same withdrawal schedule because, you know, I added them on over time. I didn't start with 20 like I said the other day. I went 3 at a time, 2, 3, whatever. And I get payouts on different times. So I'm trading smaller to keep them together or to get them together because I have quite a few accounts that are well above the required amount to take a payout. But other ones are just there. So I don't want to risk those other ones taking normal size losses and coming back down. I want them to slowly get a little bit to that point where I can just request them all at the same time. So that's why I did that. So you'll see as I fast forward here. Well, let me go. This trade went fast. So let me go here. It just shot down, right? And then you'll see, that's why you see the dollar amount's going to be smaller than normal. Like normally this trade would have made me like 18 to 20 grand on my normal contract sizing. So it got right there, hit the London high. I was like, oh crap, come on. So I might break even though. I'm covered. My trade's covered regardless of what happens. But then it ends up coming back down, taking my target. And then it ended up running, like I showed, all the way down to that volume bounce. So great trade, beautiful trade. Took no heat on it, worked out perfect. And that's how you want to align your framework. You want to do a top-down analysis. And that's how you can actually have a bias one direction and still take a trade in the opposite direction if you know where price should be going. So, all right. I hope you learned something from this one, picked up a couple nuggets, and I'll see you on the next trade recap. As always, trade well, everybody. Take care.
Yeah.